Hi there folks, happy Sunday. Hopefully you had a great weekend so far. Welcome to another clip here on my YouTube channel, and just to remind you, there's a possibility just to have a click here on the red button down there to be a member of this channel. On top of that, I invite you to leave some thumbs up. Very much appreciated. Let's face another asset class today. Besides the currency markets and the stock markets, let's have a look at the current price and the current moves of gold. So before we get into some fundamentals, let's have a look at the chart technical picture right now. The usual chart technical picture, and on top of that with the usual Fibonacci analysis, you see a 13-month daily chart technical picture. And it starts from the record high of the August 2020 here at 2075 US dollars. And you see the low, the last low here from the end of March, approximately at 1,677 bucks. So these two markers, as usually, combined and used for a Fibonacci analysis. And a typical Fibonacci retracement's been built by the platform. So let's say the points we are possibly using this time here, the 61.8 level, just to express a couple of moves back up the road. And the last one you see here is the last low, so the 0% around that 1,677 roundabout. Okay. And there are a couple of lines I added to this chart technical picture here. And for example, first of all, the ascending trend line here. This one broke on Friday just due to the fact we had a stronger US dollar during that non-farm payrolls for the month of July. And you see that there are three black lines here. I simply added them just due to the fact that we have some lows and some possible support zones here, just because of the reason that there is something like a line you could draw here and see a support zone around this level of 1,750s. So there is a low from the end of April here, and there's a low of the end of June here, and now we got here as well. On top of that, you see I added a lot of arrows just to show a possible reaction where this price of gold could head to. So you see that the first move up here to the ascending trend line and a breakthrough the ascending trend line, testing it back there and going back up to the 50%, going back down to the 38.2%, and rocking up to that 61.8 level, which is actually at 1,923 bucks. So this is the same, almost the same level we see here, and this is why I just implemented that black line here. That's the last high we see from 1,916.65 from the end of May. All right, of course, you could easily add a lot of question marks to all these kind of moves, because it's simply a theory, and you could use that as well right down here. This is just something like to show you where the price of gold an ounce could move to. The other way around, we could see that the gold price is tanking more and going back down to this old level we saw at the end of March 21 here in direction 1,677 bucks an ounce. Right now and to the next days to come, there's a possible retest of that ascending trend line just because of the reason we are approximately at 25. We are quite oversold here on a daily basis. So that's just a thought. You see there are a couple of lows when you go back into last month here, September 21, November 21, November 20 and September 20, excuse me. And you see that one in March, end of March, and beginning of March here, and the end of June move into this theories here from the RSI, so the relative strength index, where it's getting more and more oversold. So there's a retest possibly of this ascending trend line just because we are oversold and we are retesting and rebuilding a little bit into neutral territory. Just explaining the two lines here, nothing about rocket science. It's simply the blue one is the 100 EMA and the red one is the 200 EMA, so the exponential moving averages. Nothing to express about that. Just, of course, to visualize this one here, it broke down and is now going away from the EMAs, from both EMAs. So possibly there's a couple of power needed to get back up here again. Okay, that's the chart technical picture. Let's just face the facts, what is going on with the gold price and what could possibly happen from the fundamentals as well. All right, folks, I supported myself with a little bit of a cheat sheet right now, and just to place some numbers and regarding that current gold market cap, for example, we are speaking about 11.2 trillion US dollars gold market cap. So how come? Where is this number from? Well, the World Gold Council, for example, told us that based on that data, 197,500 metric tons of world above ground reserves are available out there. So if you combine that and if you just calculate, there's 1 ounce right now at the Friday close of 1,763.10 US dollars, and you just multiply that with the metric tons, you'll be arriving at that number. All right, so 11.2 trillion US dollars. Just compare that to another asset class. A lot of boys out there did that with Bitcoin, for example, with the price of Bitcoin right now. The time we are speaking here is 44,475 bucks right now. So if you compare that with the available Bitcoins out there, so there are 18,780,000 Bitcoins available. And just if you combine that, you'll be reaching around 835 million US dollars market cap. So not yet a billion back. Pre record highs of the Bitcoin, of course, served us a little bit more. But if you just compare that with the available market cap of the whole gold market, it's still small. So if you just add all the cryptos, you'll be reaching, of course, a little bit more, but it's still not there like you see that one with gold. Regardless to say, I think this is nothing to compare in the long run. It is some kind of exciting, some exciting numbers, and just to show you how really big and liquid this market of gold really is. So that makes sense is to still use it for everyday trading or swing and position trading. Regarding some other numbers, you see a couple of numbers to be served as we spoke about the chart technical analysis. You see that non-farm payrolls number for the month of July. So what does it mean for the price of gold? I mean, the longer this kind of a success story at the U.S. labor market succeeds, and goes on and goes on and goes on, so the lower the price of gold maybe really gets. So that is only one thing of the whole topic, because if you check the numbers, 943,000 jobs added in July 2021, and the unemployment rate right now 5.4%. And if you check that out, there is still 8.7 million people unemployed. So pre-crisis levels, you see the February 2020 numbers, and you see there is an unemployment rate of 3.5%, and there are 5.7 million people unemployed. So there's still a gap of 3 million jobs. 3 million jobs is a lot. It's really a lot. So if you just check that out into the next month to come, and the more the U.S. labor market succeeds and the more the unemployment rate is going to tank, possibly the more the price of gold gets back down to this old level we saw on the chart at the level of 1,670s or even a little bit sub that level. So that would make sense. So the longer this kind of a trend the U.S. labor market succeeds and keeps on going, the lower the price of gold could be. On top of that, adding before we close here, the city, for example, the investment bank, told us that the gold price could be getting back to this kind of a level we are speaking about the 1,670s, for example, into the last quarter of the year. So this is something like you could add to your kind of a personal opinion when these boys are telling you that the price of gold could move in this direction. So just saying. On top of that, the old stuff like the chart technical analysis we already had, and this kind of fundamentals we right now served into that. I'm speaking about we because I mean we traders, we all the market participants could sum it up to something like a lower price of gold in the longer term. Into the short term, to the next days or the next week to come, this could lead to a retest of the ascending trend line we saw on the chart, just because of the oversold levels. But this is something for 1 or 2 days, and that's it. All right, guys. Hopefully you will have a prosperous week and a couple of good trades. And I wish you the very best. And hopefully we'll see us next Friday here at the same time. Don't forget to leave some thumbs up, please. And just to have a click on the red button to be a member of this channel. Thank you very much. Bye-bye.